Hey traders, what's going on everybody? How are we? Let me pull the question thing out here. Okay. All right, what's going on? Jamie Saettele here, SB Trade Desk Midweek Strategy Webinar. Let me know that you can hear me, please. Horace says I'm good. How about you? Not bad. I don't know why, but it seems like it's been a while since I did this webinar, and it's only been a week. Anyway, all right, I'll set up here. Okay, so pretty quiet for the most part right now. Definitely feels summery as far as the market conditions are concerned. Low volatility, except for that one day last week, right? If I look at the S&P, except for that one day last week, which was essentially all of wave C of this or what I think is a triangle. It's just kind of drift, right? Melt up, some will call it. I think so. We've had a number on the S&P for a long time, 2480 to 2490. And I think I actually put this chart in the Monday update, but if the interpretation of this is correct as a triangle, then what you're going to see here is a little pullback and then a move higher, which would be, our triangle terminal thrust, and that would be into our top. So the measurement for that is, again, if this interpretation is correct, that it's a triangle, it's actually 2481. So it would be right in line with what we've been thinking really ever since the market took off after the election in November. That's our number, 2480.90. Obviously, if we start to break down before then you'd be stupid to not change your strategy. But this is my thought process. All right. Basically looking for a pullback here. I don't know. We got the minutes today, FOMC. I'm not sure if it's supposed to be a big deal today or not. But I'm looking for a pullback here and then higher. So that's the deal with the S&P. We'll continue to keep an eye on that. But I really want to focus more on dollar stuff right now. So here's the daily chart. Okay. I know sentiment's gotten a little extreme lately. Some may follow or be familiar with DSI, right? Daily Sentiment Index. So it's a trader's poll, and I know recently it got down to I think 5% or something like that, which is extraordinarily rare. Readings below 10 really don't happen all that often, and we have gotten a little bit of a bounce in the dollar, right? Yesterday. And if we do continue to get a bounce, I am expecting that essentially 97, 90 to 98, maybe a little above 98 caps this, really 97, 90 or so. And you can see the solid parallels that are on, on these lows here, even, with the breakdown here and then resistance here. Right. Leon says maybe becoming too widely followed. No, that's not the case. It's been widely followed for decades, right? A lot of people have followed that. You said Jake B and Christian. Yeah, Jake Bernstein is actually the one that invented it, right? But there are a lot of people talking about the extreme in the dollar and that it's some sort of a low. I don't think it's some sort of a low. We're going to follow this. All right, we're going to follow this, If we get down on to the lower channel line here in the election low and get some big, volume capitulation, then maybe we'll have some sort of low. But in the meantime, I think the best strategy here is just to essentially be a dollar bear, especially against the commodity currencies, right? Dollar CAD lower, Aussie higher, Kiwi higher. Sell the dollar on dollar rallies there, and we'll navigate as more information becomes available. But even here's the weekly chart. Okay. I think that the election low would be the first real test. Okay. And maybe down towards the lows from last August, which would be near 94. Let's look at this is the dollar index analog we've been following. This does say that you could have a low, but it's the only analog I have that suggests you could get some sort of a dollar low here. So I'm open to basically ignoring it for now. The euro one has been really spot on. And this says that we're higher into at least early July before we want to think about, a really solid pullback. This is crazy that this has been following to this degree. Remember, this is the inverse relationship of price action since 2004. And it's been spot on. So yeah, this says euro basically higher into late June, early July, which actually would fit with seasonals pretty well. What's this? Euro dollar. Yeah, you can see here the seasonal for 15 and 20 year peak in late June for euro. Seasonals for dollar for DXY really come off until through most of July. And then if we look at it this way, you can see that June is historically a bad month. In fact, 30, 20, 15, 10, and 5 all suggest lower for dollar. So, it would be nice to get a little more of a dollar, bounce into those red parallels, which again would be, 111 euro dollar. So, euro dollar charts from last night, right? The weekly chart, really the biggest thing I care about is this parallel. I mean, it's really what it's all about, folks. Okay, it was huge resistance throughout really almost the last 2 years, right? Every rally since the March 2015 low, and we've broken through it. It should provide pretty solid support now. Here's the shorter term chart we were looking at last night. You actually, if I go hourly, you can see you do have an impulse down, right? 1, 2, 3, 4, 5, and a little bounce. So if minutes come out, you get kind of movements in both directions, perhaps. I'm open to maybe an A, B, C. So I'm open to, again, 111 is what we're looking for. But with an impulse potentially completing on the downside here near term, you could get failure on a bounce into 1219, 1230 or so. And again, we've got FOMC minutes coming up, so that may be just what the market's waiting for in order to, to get some flows going. cable. Incidentally, the cable chart, the analog that we've been on for quite some time, also suggests higher, so lower dollar into late June, which is a good sign because it agrees with the euro one. Okay, open to a little bit of a dip here. Came into the week actually because we went short cable last week, but didn't really, I don't like trades that don't kind of move like right away. So we were short here, market kind of tested the highs, came off, and the 29.28 level is the high vol. Actually, the 29.25 level is the month open, but 29.28 is the high volume level, and then you've got, I guess that's the 20-day average down there as well. So there's a lot to get through right down here. You can see that 29.28 level, right? In fact, this morning's low is pretty much right on it, 29.30. So with pound dollar, I'm open to a move back down towards at least the floor, the horizontal floor down here from early in the month, early May. That would be down near the 28.30 area, and then kind of check it out. So trading wise, yeah, if we say we come off some, okay, get down through 29.28. Would be willing to short a move back up into that level, 29.20s. Just for fun here, you hate drawing in stuff too early. Horace says you meant long. No, with cable, I meant short. I'm open to a short if we break down below 29.25 and then get a bounce back into that level. Right, you can see pound's been the laggard here. And if we go to a daily, see, for one, this is weekly RSI. I think people misuse RSI a lot, but one way that I like to look at it is, how does the market respond when you're at 60 and 40? Because in a strong downtrend, 60 does tend to be resistance, right? So I do think that cable is higher into the, through the next month or so, because I'm looking higher towards the end of June. But yeah, this is a pausing point. This is a struggle point. So Horace, it's all a matter of time frames, right? So yeah, if we can get a breakdown through this 29.28 level, you might see some support around 2900, but then you get a little bit of a bounce, then yeah, I'm willing to take a short with 80, 90 pip stop and say maybe looking for a move down, down towards the floor from early May, which would be 28.30s, right? But yeah, then the bigger trade would be looking on the long side. It's all a matter of time frame and how nimble you want to be. But this is a good channel, to follow. Cable seasonals, by the way, cable's been a great study in seasonality this year, for the most part. Coming into seasonal bottoming points over the next 1 to 2 weeks. You can see here it's been very solid, right? Seasonals called for lows in the market to turn up in early mid-March. Obviously, that happened. called for upside basically into the end of April. That happened. It's actually called for downside this month. That hasn't happened, but it hasn't really gone higher either, right? We are 20 pips up on the month at this point. And you can see here, June, historically a very good month for the British pound, second really only to April. Okay, so that is cable. In my notes here, I wrote this morning, willing to try the short side if things look right after a break below 29.28, but would just be targeting 28.30 and don't want to get too cute, right? Meaning basically it's an uptrend. Don't try to reinvent the wheel. So, maybe the better trade, Horace, is maybe you're right. Maybe it's just to wait for a pullback into that support region down towards the lower channel area. Just play that channel. Now, here's the thing, too. I don't want you to think that if this channel breaks, that all of a sudden I'm giving up on long cable, because that would not be the case. All right. There's more information here that suggests long cable is the right thing to do for a while than doesn't. And this, here's a parallel as well. So let's say this comes off. You can see you've got good touches on this parallel too. So let's say it comes off, and you break down here. It doesn't turn me bearish. In fact, you might actually at that point be getting into support. Right, 27.75 is the high from December. You recall we were actually looking for something like that back here. We were looking for this basically to pull back. And once we didn't, we actually tried the long side with some orders where it's never triggered. That's okay, right? Pick your spots. But yeah, these former highs should be monitored in line with any sort of slope stuff. All right, I've spent enough time on the British pound. Moving on, dollar yen. So dollar yen, I'm thinking it's kind of range for a while, right? After, you know how it goes. After you have a big move like this in Japanese yen, the market, everyone wants to trade it after you get a big move, right? That's usually what you want to do, is try to anticipate the bigger move and then get in and then get the hell out in a low volatility environment, because you're going to go into this drift mode, right? So we've got the minutes coming up later. I'm leaving the order in, as far as at least for myself. It's up to you guys what you do, but I'm down to trade with an order to buy at 11.50, right? The high volume level is 11.43 on 11.43. That was, the big sell-off last week. That was this hour here. Okay. And that intersects with the 5-day average as noted last night. And I know most of you know this already, but when I'm looking at a 4-hour chart, a 30-period average is simply 5 days, right? 6 4-hour periods in a day times 5 is 30. 120 would be a 20-day average. So basically, I'm just looking to play the 5 and 20-day average. I actually think that dollar yen can go a little higher than this, but 12.35, but it's just a really good price level because you've got so much there. The 2 equal legs, the former low. Essentially it's a breakdown level too. I mean, once that level went, you really took off to the downside. And then the 20-day average. So, get in, get out in conditions like this, because it's slow going here. Let's take a look at the analog, because there's going to be, when things get slow, it's easy to kind of force stuff. You don't want to do that. You want to be aware of what the potential for the really big moves are, right? And I still think that the really big move eventually is going to be towards a dollar yen rally. Okay. And remember the analog, right? From way back. This was a video that I made in January. And if you haven't seen it, take a look. I explain everything in it here. The January 19th dollar yen video. Because eventually this is going to come back into play. And we're not going to want to miss something like that. Again, we're talking about the inverse of this price action right here. Leon's saying dollar yen rallies at the same time as euro rallies. No, that's not true. I said I'm looking for a dollar yen rally to begin in July. Right? This is the July low for the analog. In fact, it actually fits with the euro. Right? This is July. Euro should be coming into a top if this continues to follow. So if nothing else from today's webinar, basically write down on a sheet of paper, dollar bearish until July. Okay. So here's the dollar yen, right? Dollar yen analog. So again, I think we're probably going to be in some sort of a terrible, nasty range for a little bit, potentially leaning toward the downside for the next month. That doesn't mean that we can't try to trade the good levels like 1150, et cetera, et cetera. But eventually the big opportunity is eventually going to be probably on the upside dollar yen. And again, this ties in so beautifully with the seasonal aspects. Dollar yen. Right, dollar yen can come into an early June top and then lower in the dollar, right, until you start to get into July, at which point you could start to see a bump. And over 5-year seasonals, you've had things turn up in dollar yen in August or late July, early August. All the other seasonal stuff, it waits till October, but we'll deal with that when we need to. Okay. But yeah, you can see the bearish seasonality for the next month at least on display in dollar yen as we're coming into a top seasonal, seasonality wise over the next 1 to 2 weeks. Okay. One of the things that I talked about last week, Kelly says, short-term dollar, are we shorting 1235 then buying? I'd rather not do that, Kelly. I'd rather leave the order to buy 1150. Okay. We may hit 112.35 first, but noted last night, right here. So 1235 is a very well-defined level. Okay. I want to see a good response there. Like, in other words, I'm going to wait for the day to end. Because you know how it is. You get caught if you're trying to get in a dollar yen short, especially in an environment like this, which is super quiet, like volatility is non-existent, right? It's very easy to get caught in a dollar yen melt up where it's like the market just kind of ticks higher, ticks higher, ticks higher, hour after hour. Again, so 1235 here is a good level, but what if it wants to, we could continue going higher into 1330, which would be the 1618 of this move, right? We could end up going into a triangle or something. So I'm leaving an order to buy 1150. I don't care if 1235 is hit first or not. If we come off and we hit 1150, I bet we bounce anyway because it's such a good looking price level. The 1290s too. I think I said you can see the square root levels here. Let me get rid of this and let me just leave the square root levels on because you can really see, I think, really highlights kind of what's been an important level or area. So here's 1290. Okay, you can see here, really good back in March, support, resistance, breakdown. For the most part, it's been the area around there's been, fairly important. So you're gonna want to keep that area in mind too. Okay, the 1290s. Okay. All right. So moving on to the commodity currencies. You know, it, big market events like what happened last week with the big down day in the S&P. Look, you look at the S&P on a long-term chart, it doesn't look like a damn thing happened, right? However, we did have a VIX move that day of like 40 something percent. So it actually was a fairly important, to me, a fairly important day. And a lot of times, at least I've noticed this over the last couple of years, so I think it probably has been true for a long time. Those events, those big, those kind of like panicky market events, they tend to lead to a behavior change in the theme of what's going on, right? So heading into that, the theme wasn't necessarily dollar weakness, it was more so euro strength, right? Because we had things like Euro Aussie and Euro CAD, is kind of Europe against. Those things really on tears to the upside. So I think that the baton, if you will, and don't get me wrong, I still want to be buying 111 in euro, right? More than likely. At 111 is huge for euro. But I'm really more excited, I think, on potential from here with the commodity currencies. And I think that the Elliott wave pattern here in Aussie really, really puts that forth. You can see A, B, C, D, E. It's a real beautiful triangle. And if we get a C wave higher, it could be quite violent because we've been in this tight consolidation for so long, and we don't want to forget that we have this super tight range in Aussie, right? We're going on 304 weeks now without making a 52-week closing high. Again, that's the longest in history. And once you go that long without, essentially that long in a downtrend, prone to a violent move. So keeping a very close eye on the near-term stuff on the Aussie dollar. Levels that have been written about this week have actually played out okay so far. You remember we talked about 74.47 as being a level. It looks to be just about the low today. Well, we got 74.42. An A, B, C would be nice. Let's see where we would get two equal legs down. It'd be 74.09. So a little bit below. Leon, talking about China. It's actually, I'm glad you brought that up. Let's take a look at China. China's certainly been in the news a bit lately with its fundamental issues. So let's take a look at a Chinese equities chart. I'll pull up FXI, which is just the, well, this chart doesn't look bad at all. Is there an index that we should look at because that where China's been falling apart? Because it doesn't look too bad to me. Shanghai. Okay, let's Shanghai. This is the Chinese large cap ETF, by the way. Shanghai Composite. Okay, there's that. Hold on. See if there's something else too. Oh, I think this is the one. The Class A index. Yeah, so people are probably looking at this, right? Something like that. Yeah. Yeah, I mean, I get China's been, the Shanghai has been coming off. Aussie's actually been going higher though, so. Here's the Australian equities. Still in a pretty solid looking uptrend here. In fact, dip just tested support. Either way, Aussie dollar, yeah, I mean, to me, the thing here is the triangle. It's a beauty. So I'll be watching for good entries. Oh no, Leon says Rickards. You're bringing up Jim Rickards. This guy, Jim Rickards. I'll tell you about Jim Rickards. Jim Rickards has been saying all kinds of asinine shit for decades. I mean, he comes out with these things like where the dollar's supposed to crash on December 31st. Look, the guy's I'm sure he's a very intelligent guy, but he's one of these guys that comes out with all kinds of crazy, conspiracy theory, like the market's going to crash every day, type of things where, how many times can you cry wolf and it doesn't, and people still listen to you? I don't know, whatever. All right, I'll leave it there. But yeah, very smart guy, but I mean, the whole, like, the world's been, according to Jim Rickards, the world's ended, 365 times in the last 365 days. All right, so let's move on to Kiwi dollar. Beautiful chart. Still like the entry at essentially at this high. I mean, it's just a good looking chart, right? Want to buy a test to the high from here, form a resistance. Maybe you get 69.50. I don't know, because that was also form a resistance, but this is just a classic breakout. Okay, breakout bar, stop below the breakout bar low. Again, was targeting something like up here, but I think the median line should be targeted because it was resistance back in March. Okay, you can see here, this is a good looking chart. 1, 2, 3, 4, 5. I guess an X wave. 1, 2, 3, 4, 5 with 1, 2, 3, 4, 5. So looking towards basically 71.30, 50. 71.50 is the 50% retracement of this. Kelly's already long. Yeah, I think you'll be fine. Again, I think that you're headed here. But yeah, very much like buying this. And I've got the 4-hour alerts turned on right now. If I bring in here's the system stuff. So you can see the 4-hour alert. It went long back on May 19th. You get a little more weakness here. It'll probably trigger a long position as well. So you'll see that get sent out if it does. So that's turned on. So if you're getting any of the alerts, you'll notice that. Yeah, so like Kiwi higher until at least that 70, again, that 71.30s. Area up here. All right, dollar CAD. Lots of reasons to be bearish dollar CAD. The COT, the long-term chart, the fact that no one believes me, the fact that they were downgraded up here and it doesn't seem to matter, right? Market's acting bearish on supposedly bullish news. Really, Canadian dollar acting bullish on supposedly bearish news for it. And I think that you could end up A, B, C, or whatever. I mean, you could end up with a dollar CAD move all the way down towards $115 would be 2 equal legs down. Okay, as crazy as that sounds. Now the setup is still the same. I know that I've been leaving it entries at 35.70, so kind of hoping it would trigger on BOC. Maybe you get a bounce down here, 34.06, but the entry is the same. That is, keep this on. Keep this trend line on here. Maybe that was it. Eventually, you're going to get something where you get some consolidation to move into it. Maybe it's much later. Maybe it's over at 35.40, right? But either way, dollar CAD's a sell. It's a sell on rallies. That's all there is to it. And we can even see that when we look at the some of the crosses. See, look at dollar yen up here. Can you imagine if you were trying to short this today? You'd be pulling your hair out. Like here's Euro CAD. We've been waiting on this 152.50, area. Might not get it. It's already coming off pretty good. So either way, I'd rather be, selling dollar CAD than Euro CAD. Okay, so that takes us through the dollar crosses. I want to just, say it one more time. I like the commodity currencies here, right? Despite the China thing, they're acting well. They're acting pretty good. in the face of supposedly bad fundamentals. We're in the one of the most seasonally bullish periods of the year for commodity currencies: Aussie, Kiwi, CAD. Okay, that can't be overlooked. Okay, Euro Yen. Got that big dump last week, and since then, again, it's been just kind of it's the S&P. Leon saying, when do bullish seasonals for commodity currencies end? So here, we'll take a look real quick. So here's Aussie, okay? Really, it's for Aussie, you can see that the peaks on all the time frames or look back period all seem to end the week that ends July 14th. So that would be, you know, about not quite 2 months. Kiwi, a little more mixed, but same idea, right? You've got a middle of June peak and a middle of July peak. But for the most part, you know, kind of up and up through June and July. August is historically a pretty crappy month for commodities, commodity currencies. Dollar CAD, you can see a bearish dollar CAD for the most part through June, okay? Again, last week, the end of last week is when things turned bearish for dollar CAD on a seasonal basis, okay? And again, these don't always follow. They're just good. They're just it's good information to have, especially when it lines up with stuff like COT and your chart. I mean, it's always going to be about the chart and the price, okay? And at least for me, the support, resistance, the setups, the trend lines, all that good stuff. But these are secondary, but they are useful. I find them useful at least. Where was I? Oh yeah, Euro CAD. Euro Aussie. So Euro Aussie. Or sorry, Euro Yen, I can't talk today. Euro Yen looks like we're just going to be heading for a channel top at this point. I mean, I don't want to sit here and waste my time waiting for this thing and writing that I'm thinking about shorting it every day when it really does jack, right? So you're looking at basically this upper channel up here, which, you know, extends off this high from back in December. That would take you through the high from April of last year, which is 126.46. So if we want to go into some sort of blowout move, then I'm down with it. Horace says I'm currently short. Yeah, it might work for you. Look, I don't. It's just, again, it's like shorting any sort of yen cross right now or risk. Supposedly, you know, XXX yen cross, the S&P, the Nikkei, right? It's just dead money. It's a quiet market. It's too high to buy and it's too quiet to short. You know, I'm looking for a pullback in the S&P, but so is everybody else. So, you know, if you can withstand some pain on the upside in Euro Yen, then you might be able to you know, make this work. But there are two big levels, I think, that we want to watch out for. One is that upper channel, and the other one is this line. Wait a minute, that's not the right line, is it? Hold on. Low, low. Oh, that's actually the right low. Very particular about drawing my trend lines. Yes, there we have it. Okay, so that trend line support here. Remember, that's the one we want to see for resistance. I've had it in red on the charts we've been posting in the swing updates. And you can see that we would get up there and intersect there, you know, looks like about tomorrow up here. So I'm sure, Horace, you're already short. I'm sure you're hoping that it doesn't get up there, right? That you actually turn down first and just break. So the other option here, folks, is that the market ends up, it doesn't get here, and then it turns around and it breaks down, right? And you break this. This is your support line. If you break that, then yeah, fine. Okay, go with it. But until then, this is just dead as a doornail, my friend. We are sitting in no man's land. Market's begging to, it's trying to get everyone to short it, and then it's going to wipe everybody out, and then it's going to spill. At least that's the way I am thinking right now. It's like saying short me, short me, short me, and then it doesn't really do anything. But yeah, we're close. We're close. Again, I think this will work out if you can have a little bit of patience. All right, EuroCAD, we kind of looked there. Let's see what now that we have turned down in EuroCAD, let's see what this looks like. Yeah, might be worth looking at this as resistance right here, right? 50, 90 breakdown level. This would be one that Mike would probably do. If he were looking at this chart, he'd probably want to go with a short-term fork like this, which would be pretty good looking, wouldn't it? So that could be something to trade for a while. I like when looking at a short-term fork like this after you've come off of such big resistance, right? Because at that point, you're giving yourself the chance, you're trading a reversal. So, everyone always says, don't pick a top, don't pick a top. You are trading reversal. You are trying to pick, kind of a bigger turn, but you're giving yourself, really specific levels to do it, right? So this might be one to look at in the swing update later. It's a pretty good looking chart. Let's look at Euro Kiwi because we've got Kiwi. So I'm pretty bullish on Kiwi. And month open 58.78. I wonder if you might this might be something where you just want to trade this channel. This is a weekly chart, right? Going through the top of it. This might be something where we're going to come back into this channel at some point. 56.30s, test the low from earlier this month. Again, much rather would be buying Kiwi dollar on a dip, but Euro Kiwis is not all that bad. All right, let's look at a few commodities. You guys want to look at gold? Should we look at silver? Yeah, Horace, gold and silver. Sure. So pretty awesome. This trend line, 2011, 2012, the gift that keeps on giving, I guess. You can see it was resistance again. fact, it was resistance yesterday and last week. So I think that gold is eventually higher. This to me is an impulse, right? So a couple levels to look for support. Watch that trend line. The 618 is 1233, so it's a little deeper, and we've seen some pretty wild swings, right? In other words, getting what you would consider to kind of be the the extreme areas of the range. But the 1240 area is pretty good too. Okay, 1240. Resistance in February, right? Support in March. So 1240 would be the first area to watch for support, but we have come off of this big resistance here. Silver come back into resistance. I think we probably looked at this last week. This is log, so maybe a little higher. The thing with silver is the COT, right? So like British pounds, in which we've had the biggest buying. This is again another reason to be cautious on any sort of upside for cable right now. Is the fact that you've had just extreme participation lately. But if I look at the silver chart, do the same thing, right? We have the 4-week change in positions, and you can see here that well, it's never happened before. The extreme change in positions that we've got. So we've got here, let's see, 4 weeks negative. So I'm going to do negative 60,000 contracts to show you that. And by the way, it's a negative 120,000 contracts, which means the amount that speculators have sold, and subtract that from the amount, and subtract from that number the amount that commercials have bought. So you get what you're getting is a very large negative number. You're taking a large negative number and subtracting a large positive number, you get an even larger negative number. Okay, so Horace saying what happens when we have this major change. So basically what I'm saying is there's two ways to look at COT data. You can look at it on absolute terms, and you can look at it on a relative shift, right? A recent shift. So whereas we had a record amount of, just recently we had a record amount of speculative long positions, right? They've been completely wiped out. Okay, so they've capitulated, and that capitulation does tend to happen towards a market low. So again, this was double of basically what we've seen historically, and you can see it's at the exact low, not all the time, okay, but you should be, when you see something like this, you should be on alert for a much more important change in the market. And in this case, with the market basically plummeting, for the last 4 weeks, we're looking for exhaustion low. So on the price chart, so here's the silver price chart. Pretty obvious. Just look at follow that line there. You got a channel going on right here. Okay. There you go. So you've got a channel. If silver does end up coming off a bit, which I think it probably will, just because gold is at, its big resistance level as well, then Horace saying, should I expect a deep drop? Well, from here, yeah, as long as you're within this channel, you want to look towards channel support. Okay. And I would say the channel support, again, it depends on when or if you get there, but let's just look at the levels that have been important to the market. The 1680 area has been pretty good, right? A little ABC. Horace saying, should I expect a deep drop with the COT change? Well, no, this is a weekly chart, and we've already had a massive drop, right? 3 weeks down is like a 3-week plunge. So no, you don't want to expect a deep drop after you've already seen this happen. What you want to see is you want to see a base form. You want to see a silver base, right? Because this tells us all this selling by speculators tells us that that you've basically the market's capitulated. Okay. What about copper? Pressing resistance here in copper. The channel, okay, from the highs back in March. Gonna want to watch copper as we move forward because look, there is always the risk that this actually does turn into a topping pattern of head and shoulders, whatever. All right. I'm positive copper for the time being. Okay. I think that you had a fairly important behavior change take place last November when you got the surge through the pullback, which held the top side of the trend line. Tried to break through it a couple different weeks here recently, and it's held, which is a good sign. But going to want to pay good attention to the high week close in copper, which is 270.65. That would be in play with, your long-term parallel up here as well. So don't get super comfortable with this. And this will be something that we're going to be paying attention to with as Aussie moves forward here, as we move forward, and I think higher with the Australian dollar, throughout the next month or so, which is the seasonally bullish period for Aussie. So be paying attention there. Okay. Are we all good? Because I've gone through pretty much everything that I wanted to at this point. Before you end, Kelly says, I'm looking for what entry you're looking for in Euro. Thank you. Yes, so there are two things, Kelly, I would do heading into the minutes. Again, pay attention to DXY, that area. It's about 97.86, we'll call it. I would like to see a bounce in Euro and another drop down here. Okay. Because again, getting yourself what appears to be a nice little 5 waves down, right? Maybe 1, 2, 3, 4, 5. So something like that. If let's say that we did get a 5 wave, let's just say for the argument's sake that we just got a 5 wave move down. Okay, so you get a pop on minutes. Horace asking about pound yen. I will definitely take a look at that for you. Get a little bounce, maybe a B wave, and then another drop down into 111. Basically, though, Kelly and everybody else, 111 is just really, really big. Okay, it's huge, and not necessarily because of this chart, but really because of that weekly chart. I mean, this weekly chart of euro dollar, going back really to 2012. 2012 here, gap, resistance, 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 resistance on the election, breakout, pullback, test it, free to go higher. So 111, that's my jam right there, 111. On the short term, it would be nice to get a bounce and make ourselves an ABC down from the top. Pound yen, moving on to pound yen. Horus, pound yen. So pound yen is actually, I guess, looks a little more bearish, say, than euro yen as far as the near term picture is concerned. You do have there is a trend line to pay attention to here. Go off this and this. There you go. So go off those two lows back here in April. And we did break it, and we are below it. And we tried to retest it back here a couple days ago. I guess that was last week. We didn't quite do it. But yeah, pound yen, I'm open to this being more of kind of a flag situation, right? Where you got a drop, consolidation, you're going to go for another drop lower. The big level to pay attention to in pound yen moving forward is probably going to be this one. You're simply looking at, an old parallel here. It didn't really do much on the way up, but if you can get down and test, a confluence of a horizontal level with 50% puts you at 141.84. Yeah, so this is the level that you're trading at, that we're trading at now, is pretty solid as far as resistance is concerned. You can see the highs back from January. It's actually the first day of the year high is 145.38. It's right on today's high. So again, let's see what today brings. If you can get a bearish day here, this might be one way, or to try to play a pound yen or a British pound weakness over the next couple of days, is through pound yen. Okay. All right. Thank you very much, everybody, for attending the webinar. Appreciate your time. And we've got minutes coming up here in, I guess, 2 hours, I believe. Should be in 2 hours. Yeah, 2 hours. So go get some lunch or something. I'm going to go get a haircut. And I'll be ready and set. Kelly says, yeah, keep up those awesome tweets. I seem to kill those. Yeah, well, I try to do it. I try to put them out when there's a good level being tested. It's been really, as far as that stuff's concerned, it's been pretty quiet, right? The last couple of days, really, because it's just, there's not a whole lot to, I don't want to be one of these guys that's just throwing crap out just because I feel like I have to, right? I'd rather put something out when there's actually something to say. But yeah, let's hope that things pick up here after the minutes are released. Back half of the week, usually a little busier in the beginning of the week. So yeah, looking forward to that. All right. Okay, guys, everyone, thank you very much again. Let me get this archived and put up on the website. And good luck today. All right, take care. Bye.